and gentlemen, good day and welcome to the Aditya Vision Limited Q1 FY2025 Results Conference Call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over conference over to Mr. Percy Pantaki from IIFL Securities Limited. Thank you, and over to you, sir.
Hi, good evening, everyone. It is our pleasure to host the management of Aditya Vision Limited for its Q1 FY25 conference call. On the call with us, we have Mr. Yashovardhan Sinha, Chairman and Managing Director, and Ms. Yosham Vardhan, Whole-Time Director. I'll hand over the call to the management so that they can take you through the results and then there'll be a Q&A. Thank you and over to you.
Thank you, Percy. Good evening, ladies and gentlemen. Welcome to our earnings conference call for Q1 FY25. Today we'll be discussing our company's financial performance and strategic updates during the quarter. Our investor presentation has been uploaded on the screen and we hope you've had a chance to review it. Aditya Vision has once again delivered an exceptionally strong performance in this quarter, marking a significant milestone in our journey. The quarter witnessed a significant uptick in consumer spending, particularly driven by summer season. During this period, summer season led to a significant increase in sale of compressor products such as ACs, air coolers, refrigerators, and commercial refrigerators. As we all know, Q1 is our strongest quarter where we see huge demand for summer products such as ACs and other cooling products. Before the start of Q1 FY25, we anticipated a strong sale and we were fully prepared and stocked up for the quarter demand. Due to stocking high inventory of compressor products at the right time, Q1 has seen exceptional revenue growth of 39%. Sale of air conditioners grew by 56% YOY. As mentioned in our previous earnings call, our inventory remains highest on March 31st every financial year due to strategic reasons where we adopt an aggressive inventory acquisition approach to be well prepared for peak summer sales and to avoid stock-out situations of compressor products. At the end of this quarter, there is a considerable decrease in inventory levels by approximately 66 crores, that is from 433 crores as on March 31, 2024 to rupees 367 crores as of June 30, 2024. Our operational revenue increased by 39% YOY to rupees 889 crores compared to rupees 641 crores in Q1 FY24. In line with our revenues, our PAT increased by 42% YOY to rupees 53 crores compared to rupees 37 crores in Q1 FY24. Bihar contributed the most to our top line with 81%. Jharkhand and UP contributing 11% and 8% respectively. Our SSG for this quarter stood at 21%. This strong growth was fueled by consistent growth from matured stores, increased contributions from the new stores reaching maturity, and efficient inventory management. Operating leverage improved as our PAT growth this quarter has surpassed our revenue growth. During the quarter, we have hit the 150th mark of store opening with over 105 stores in Bihar covering all districts, 25 stores in Jharkhand covering 20 out of 24 districts, and 20 stores in UP with just over 1 year of operation covering 14 out of 75 districts. We added 5 new stores in Q1 FY25 and our store count as on 30th June 24 stood at 150 stores. The recent fund raised has been utilized by the company and as on date the company enjoys a net debt-free status. The finance cost includes interest cost of 2.1 crore as well as lease liabilities in interest owing to application of AS 116, which has gone up significantly due to rapid store expansion in the past 1 year. During Q1, even after stocking significant number of air conditioners as on March 31st, 2024, there was a shortage in all parts of India, especially east and north, where summer approaches relatively later. To ensure healthy level of air conditioner inventory, we were constantly buying compressor products, which led to utilization of our cash credit facilities bank to some extent. Overall, we had an exceptional quarter and would like to emphasize that the growth of the consumer durable in electronic market in under-penetrated region of India represents a significant opportunity for us as well for our OEM. As rural income continues to rise and infrastructure improves, the penetration of consumer durables is expected to further deepen, driving sustained growth in the sector. The increasing disposable income, aspirational living, easy financing options are leading to significant growth in the sector. Our focus remains on expanding our retail footprints. We will continue to identify and enter new markets in Hindi heartland that offer growth potential to cater to evolving consumer preferences. We remain focused to our creeping cluster approach of expanding from Eastern UP to Central UP this financial year. We are fully on track to add 25 to 30 stores in the current year and target to reach at 200 stores by FY26. We are confident in our ability to sustain this momentum and deliver long-term value creation for all stakeholders. Together, we will navigate challenges and seize opportunities to propel Aditya Vision to new heights of success. I will now hand over the floor to Mr. Yosham Vardhan to provide an overview of the financial highlights for the quarter. Over to you, Yosham.
Thank you. Good evening, ladies and gentlemen. We are pleased to present the strong financial performance of Q1 FY25, and here is a summary of the same. In Q1 FY25, revenue surged at YOY increase of 39%, reaching rupees 889 crores in Q1 FY25 compared to 641 crore in Q1 FY24. There is a slight increase in gross margin at 15.2% compared to last year Q1 gross margin, which stood at 15.1%. EBITDA for this quarter stood at 85 crores. We maintained EBITDA margin at 9.6%. PAT for the quarter stood at 53 crores, up by 42% YOY compared to 37 crore in Q1 FY24. EPS for the quarter stood at rupees 41.07. Our store count stands at 150 stores at the end of this quarter, with 105 stores in Bihar, 25 stores in Jharkhand, and 20 stores in Uttar Pradesh. SSG for Q1 FY25 stood at 21%. Inventory stood at 367 crores as of June 30th, 2024, decreased from 433 crore as of 31st March 2024. Now we can open the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devanshu Bansal from MK Global. Please go ahead.
Yes, sir. Hi. Congratulations on a very strong quarter and normalization of inventory levels. Sir, my first question is on gross margin. The media reports sort of suggested that there was shortage of compressor products and the discounting was also relatively lower. However, on a YOY basis, when we see our gross margin, though there is an improvement, but it is relatively on a lesser side. So just if you could throw some light on this, sir.
Devanshu, actually, we are moving in new territories rapidly. So moving in new territories restricts that option of making more margin. And we are quite comfortable at the current level of margin. So we try to maintain this margin and take in new territories. So this is the reason. We've got good sales from UP also, as you will find that it already started contributing 8% of our sale in just 1 year existence. So I think this is the reason. And let us not profiteering, let us not profiteer because of shortage.
Right, sir. And second half, I guess there are some incentives related to whatever good amount of sales that we have done. So that those should flow in second half, right, sir?
No, we take the provisions in the quarter itself. So that will not flow in for the next quarter. We will be doing whatever we will be doing next quarter, it will come in next quarter.
Okay. Okay, sir. Okay. And I was seeing our PPT gradually over last 2 quarters, there has been some increase in working capital per store as well as capex per store. Is this largely attributable to inflation, or there are some new category additions also that we have done?
No, it is largely attributable to inflation directly, because as you will find, even this pollution norm and other thing has kicked in for generators, so prices of generators have gone up. Inflation is there, of course. So this is the reason for capex going up. And in working capital also, we are facing that air conditioner prices have gone up by 10 to 15% across board. Even for it is there for even refrigerators also. So this is the reason of raising that guidance.
Got it. Last question from my end. The other expenses have almost doubled on a sequential basis. What is the reason for this? Is there some one-off in this? Your thoughts on this, please?
There's nothing one-off in this, Devan. So actually, when you have doubled your sale also, if you will compare from the last, more than doubled your sale from last quarter, then operating expenses are bound to go up, because your freight and other expenses goes up, your power expenses actually goes up.
Okay. Sir, yes.
Employee expenses also goes up because of incentive and all.
I get that, sir, but I just wanted to sort of put more attention to this, because our revenues have doubled, but that should flow into our EBITDA margins as well, right, sir? Because there must be some operating leverage. Last year we did about 640 crore. This time around we did closer to 900 crore. But our EBITDA margins have actually dipped by about 30 basis points. So my question was more from that.
You can attribute it to only because of expansion. Freshly opened, so many stores are there, and so in fact it is a very slight dip. I don't think that there is a significant dip in margin.
Got it, sir. Got it. Thanks for taking my questions, and all the best for future quarters. Thank you so much.
Thank you so much, sir.
Thank you. The next question is from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi, sir. My question is also on the gross margin. So what I have seen is that in Q1 FY23 as well as in Q1 FY24, the margin in Q1 is lower than what it is in the full year at a gross margin level. And I'm surprised to see this, because we have always held that compressor products are actually higher gross margin products, and this quarter we had very good percentage of compressor product sales. So the gross margin in Q1, why is it actually not higher than the full year basis for the last 2 years, and is there any change in trend expected this year?
In fact, what I told you before also, that I was talking to Devan, gross margin actually, when of course compressor products, they give you more volume, more say, top line. But today is a very competitive market, and it has been there. There is not that we are working in a non-competitive environment. And secondly, we are moving to new places in Uttar Pradesh or in Jharkhand, where we have to in fact maintain our base, and at that level at which you are. When you come, a big party comes to a town, other competitors, they also lower their prices to so this is the reason we do not focus on gross margin that much. And since very high sale starts kicking in, so this is the reason the gross margin will remain like this only, I suppose.
Understood. Understood. And just wanted to understand at what level of sales or what level of sales growth do we see operating leverage kicking in? See, what is happening is that your sales per store is continuously going up, right? Whereas your costs per store will go up, but should not go up at the same rate. So, for example, whether you are selling 5 units of AC a day or 7 units of AC a day, your electricity cost in the store should remain more or less constant. Similarly, your rental will remain more or less constant. So as your sales per store is going up, why are we not seeing any operating leverage in the EBITDA margin?
We have been giving you guidance that our EBITDA margin will remain like that, from 8 to 10%. We have been giving guidance. And I think that is a good and comfortable level for the company to work in.
Yes, sir, agreed. So you have exactly come, I mean, your guidance has been bang on, and not to say that there is any deviation versus expectation, but just trying to understand the underlying mathematics here as to why we are not getting operating leverage, or do you think we are getting it and then we want to invest it in lower prices and therefore the gross margin will see a slight dip and the EBITDA margin will be maintained because of operating leverage? Is that how it will play out?
You know, what happens that we are not taking into account that when we are expanding, at the same time we are expanding also in new places. So let us say advertisement cost, it will go up at that place where we are we are going in very recently. So that is added operating expenses. Otherwise also we bring so many schemes for customers, like giving gifts or something. We are opening a new store. So these are, and when you open new store, we have got many events lined up. So these are the factors that this is the reason it will not go up significantly from this level.
Understood. And lastly, sir, any idea when you would consider opening up new states? So we are in UP, Jharkhand and Bihar. When do you think we should be expecting venturing into any of the neighboring new states?
Firstly, think of UP. We have just, in fact, hardly covered how many districts? 14 districts out of more than perhaps 70. So there is huge potential in UP. And as we have been guiding that we will not enter into metros or otherwise, but we are going to come to the periphery of metros. So right now we are in process of crowding central UP. And after crowding central UP, we have got further, we'll move toward the western part. So right now we have not decided to enter into any other state, but we are always, in fact, mulling that whatever good territory is there, we should be present.
Understood, sir. Understood. Yeah, that's all from me. Thank you.
Okay. Thank you, Basu.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers Limited. Please go ahead.
Namaskar, Sinha Saab.
Namaskar.
Ji. First thing that I wanted to check was, how has been your experience at Uttar Pradesh? Though it is relatively a shorter period in which we made a foray. But what has been your experience, and what are the new insights that Uttar Pradesh experience has given to you in your business model? And what are the insights of our success in Bihar have not been able to so far work in Uttar Pradesh? In other words, new insights from Uttar Pradesh and new revelations about Bihar itself, which has been our very successful territory so far.
I put it bhai that Uttar Pradesh is almost similar to Bihar, what we have found, but it is more crowded, of course, by population also. And there are many players also there present in Uttar Pradesh, local players who are basically distributors but operating as retailers also. So, but we have taken the market by storm, definitely, because already now our contribution of UP has jumped to 8% of our turnover in the very first year, and in the first year in which we are continuous opening new stores. In fact, many of the stores are not even 3 months old. So this is what we are expecting, that we'll be doing very well in Uttar Pradesh so far, whatever results we have got. And Uttar Pradesh is in the process of, in fact, great transformation. So that also looks quite viable for us and our business going forward.
And any ideas which have been very operational part of business model so far and which have worked well in Bihar, but you have not seen it working with the same kind of pattern in Uttar Pradesh so far? Anything which you have not been able to replicate at Uttar Pradesh, or what you have successfully done in Bihar?
Actually, the major difference is in ASP also, with selling price also, because it's lower in Uttar Pradesh compared to Bihar. And the second big difference, I'll say, that Bihar is not driven by distributors, whereas in UP, retail is driven by distributors. So this is one major difference. And finance is also not that much penetration of retail finance is also lower in UP than Bihar.
Okay. And therefore, should I presume that whatever we have done in Uttar Pradesh so far has met with our expectations or exceeded? Or are there concerns in terms of how the experiment is unfolding into the newer states?
Actually, we are very much happy, and in fact, it has exceeded our expectations. And in fact, we are very excited to open more and more stores there, because we are finding that, as I told you, distributor-driven market is always of product selling lower ASP. Whereas we, as at Aditya Vision, we can tell you that we have got 60% share of 5-star AC among our entire sale of AC, which is highest in India. We will find from OEMs also. Nowhere in India they sell their contribution of 5-star AC is 60% in overall sale. Whereas we are doing it here in Bihar. And yes, and this is what we have got bringing in UP also. So we are enhancing the ASP, trying to enhance, and retail also we are taking along with us, retail financing also. So I think future is looking quite good and exciting.
And so, which means clearly we are not destined to be one state wonder, which is Bihar. Clearly, our territory is expected to be larger and expanding. And
yes, in fact, we will be going in entire Hindi heartland slowly, steadily, and Jharkhand has been doing very well, already contributing 12% of our sales, which is not that densely populated as Uttar Pradesh or Bihar. But still, we have become the leading retailer, the biggest retailer in Jharkhand, entire Jharkhand state. And we are expecting to, in fact, do the same in UP also in next 1 to 2 years.
Right. One last question, Sinha. One of the key reasons, as I have understood so far, behind Aditya Vision's success has been nimble-footed decision-making, entrepreneurial culture, and ability to, despite being a smaller player than likes of Geo and others, yet we have remained on the right note, both in terms of our growth as well as profitability, because of the institutionalization of an entrepreneurial culture of the firm. Do you worry that these ability to maintain that key success factor intact as we move into newer geographies and as the size happens, we also may get a bit more satiated or satisfied, and therefore that entrepreneurial culture, which is the key reason behind the success, as I've understood, can be affected?
I don't think, Bharat, that it is going to affect us or our vision or our skill is going to get somewhere wrong. The reason being that, as I told you all the time, I have been telling our stakeholders that we believe that Hindi heartland is the biggest story right now in India, where the penetrations of our products, what we deal in, is the lowest among all. And with key, as you must have seen from the budget, so much of money is going to come to Bihar. So again, Bihar will be highly. UP has not done well for the ruling party. So believe that they are going to invest more and bring some more schemes to the UP. So I think this entire Hindi heartland, which will comprise again later on, it will comprise Madhya Pradesh and Chhattisgarh also, and borders of Bihar, West Bengal will be included. So I think it is going to continue the same way because the entire Hindi heartland it behaves मोटा-मोटी एक ही तरह से it behave करते हैं.
जी, thank you, Srinath, and all the very best.
Thank you. Bye.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
So I just have one question. In the states that we are, what is the store opening potential?
In which state you mean to say?
In UP, Jharkhand, Bihar that we are, what is the store opening potential, the count possible as on dates that you can see?
We are looking forward to opening more store in Bihar in cities like, in fact, Purnia, big cities like Purnia, Motihari, Ara. These are very big cities where we are only having one branch and which are doing very well. So we are now process of putting up another store in these places wherever the sale is quite high. So, and secondly, we have to cover a lot of ground in Jharkhand also because Jharkhand has been doing well. We are going for second store in the Devghar also. Devghar has done exceedingly well. Similarly, when we see Uttar Pradesh, there is a lot of potential because even if we concentrate on, let us say, Varanasi, we have already opened 6 stores there. 7 stores, in fact. 7 stores are in Varanasi. It's such a huge, big market. And if we see Lucknow, then the potential goes up to even 15 to 20 stores in Lucknow, it is by size. So there are a lot of opportunities, and there also we are, wherever we will be doing very well in district headquarters, we will be, in future, we'll start thinking of opening another store there to cater the needs of my customers. So I think there is a lot of potentiality right now available for opening a store.
Sir, Eastern UP by any chance?
I couldn't hear you.
I said, have we expanded our horizon beyond Eastern UP in UP?
Yes, we are looking towards the central UP right now in this financial year. We'll be crowding central UP right now. And then we'll further move towards the west.
So if you just take Eastern UP plus Bihar plus Jharkhand and Chhattisgarh, if you just take these states and Eastern UP, the total store count that is possible in your business model will be how much? You are at 150 today. where you can go up
to? We have given the guidance that will be definitely in 26, FY26 will be 200 plus stores. And we'll be expanding, let us say, by 25, 30 stores every year. And still, I think overall, if you see long time horizon, we will be opening around 500 stores. It is very much achieved.
And my last question is, what is the progress on those smaller format stores which you are thinking putting between two districts in a smaller 1 lakh type smaller town? So what is the progress there? Have you put anything, and what is the progress?
These stores are doing very well. So let me tell you first of all this, that these stores are doing very well, and we are still in process of opening few stores. But because of we are getting good business in UP also, so we are concentrating on UP market as well at the same time. So these are all doing well, and we are always assessing the market potential for these places.
Thank you, sir.
Okay, thank you.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, may I ask how has been the growth rate for non-compressor products, and have you seen some improvement in growth rate of non-compressor product in this quarter versus the previous quarter?
Yes, 15% growth was there for non-compressor products also.
15%.
Yeah.
And sir, has that improved versus last quarter?
Yes, it has increased.
Right. Okay. Second question is, sir, are you seeing consumer financing companies become stricter in lending these consumer durable loans?
I don't think so. It has come to any level which is hurting us or hurting our sales. It's not like that. This part of India, the recoveries are good, and so retail finances are doing whatever they were doing before.
Right. And the last one is, so can you elaborate how much has been the price increases that have happened in recent months for the compressor products, and do you see this can impact the demand because of the price increases?
Actually, we do not think that the prices are going to impact the demand, because once I've been telling that penetration is very, very low. In fact, around 3% of penetration is there. So even if and the people prefer buying good, like what I said, that we are selling 60% of ACs which are 5-star. So they, in fact, the people decide they try to invest in those products. So we do not think that the price hike is going to dampen demand.
Right, sir. And sir, can you elaborate how much has been the price increases, for example, refrigerator and AC in recent few months?
It's not like that, but it was when there was a huge shortage, so new product came at that time, it was just 10%, around 10%.
Okay, and has that continued? Or they have corrected some?
No, it is continuing.
Right. Okay, sir. Thank you for answering my question.
Because of due to higher copper prices and all that.
Yeah. Okay. Yeah. Thank you for answering my question, and all the very best, sir.
Thank you.
Thank you. The next question is from the line of Chirag from Ratnatraya Capital. Please go ahead.
Hi, good evening, Mr. Sinha. Good evening, everyone. Thank you so much.
Chirag.
Hi, good evening, sir. All good. Thank you, sir. Congratulations on a very strong set of numbers and the continued execution. 3 quick questions, Sinha, sir. Can you help us with the number within other expenses? I'm sure there is some expense for the buy and win program that we run, or marketing related expenses. Could you broadly, if not exactly, carve out what that was in June 23 and what was in June 24 quarter? So the same quarter last year and this quarter, just that number?
That is near to that only. It's not any normal figure.
But it would have increased a lot more from last year, right, sir? I'm just trying to understand that 10 crores increase that we have in other expenses. how much of that is attributable directly to marketing costs or marketing expenses?
20%.
Okay. So 20% of 30 crores. 6 crores odd you are saying is attributable. Is that what?
Yeah, that will be something like that.
Yeah. Okay. Maybe I can take that offline also. The second question, sir, I wanted to understand is typically we talk about 6 crore sales in first year, 12 in second year, and 18 and so on for the third year, for full year of operations. All the new stores that we have had, are they broadly operating in the same format? Is there any update or any change from this general guidance, or?
No, broadly they are doing the same what we have been guiding. In fact, they are doing better also.
Okay, some of the earlier stores are doing better than this typical cadence also.
None of the stores are doing worse than what we have guided, but many stores are doing better than what we have guided.
Perfect, sir. Understood. And the last question I had was on the finance component of sales. What is for this quarter? What was the proportion of sales that was done through sort of some kind of financing, either through a partner or otherwise?
Around 44%.
44%. Perfect. Okay. Got it. I have one suggestion, Sinha sir, if that's okay, I'll make it, and if it's possible. Sinha sir, I understand, you've been saying that there has been operating leverage also, and I guess a couple of participants on the call have also asked this question. Though that's not showing up right now because we have certain operating losses also from the new stores, right? They're just ramping up. They're doing good sales, but still it takes time to for them to be able to break even. So at any point in time, if you can just carve out what kind of operating losses we are seeing or investments we are seeing in new businesses every quarter, that would be helpful for everyone participating to understand that operating leverage in the rest of the stores is paying out, if that was clear.
We cannot give you a guidance on that because all stores they behave differently. So it's not that they are doing which is consistent in giving of any branches giving operating losses. There are many branches who are doing much better right from since inception. So that will not be possible for me to give you.
Not guidance, sir. I just want, if it's possible, I understand it's difficult. No problem. But basically for this quarter, what was the cumulative loss from new stores? So that one can understand that if that loss would have not been there, then the profit would have been that much higher, other expenses would have been that much lower or something in that tune. For us to understand that operating leverage is actually playing out on the old stores, which obviously it would be, right? I mean, old stores where same store sales growth is coming at 20%, they will be doing phenomenally well in terms of operating leverage. Is that correct? As an overall.
What you're saying is correct, but giving any figure for that will not be possible.
No worries, sir. Okay. Thank you so much, sir. Thank you. Those were 3 questions. Thank you.
Okay. Thank you, Chandran.
Thank you. The next question is from the line of Rohan Mehta from FICOM Family Office. Please go ahead.
Hi, sir. Thank you so much for taking my question and many congratulations on a great set of numbers. So, in the past, sir, we have had plans for testing the markets of Chhattisgarh and Madhya Pradesh. So, on that specific point, what is your right to win in the competitive landscape of these 2 states? And who are your main competitors here? And what sort of edge do you have over them? That's my first question.
For only you are asking for Chhattisgarh and Madhya Pradesh?
Yes.
Okay. So actually, we are what I told you that we are in this financial year we are going to expand central Uttar Pradesh, and it has been our policy. Hello. Yes, can you hear me?
Hello. Yes,
can you hear me? Hello. Siddharth, can you look into it? Because some disturbance is coming.
What I will do something, yeah.
Hello. Hello. Can you hear me?
Hello.
Now it is okay? Now it is normalized. Please go ahead.
Yes, sir. So my question was, in these two states, sir, Chhattisgarh and Madhya Pradesh, what is your right to win? And who are your main competitors over here? And what is your edge?
Actually, we have not explored those markets, but as per our policy of expansion, we will definitely, if not in this financial year, maybe in next financial year, we will foray into those areas. And there are regional competition is everywhere there. It's not that it's not there present in UP or Bihar or in Jharkhand. But then our presence, our brand building exercise, our expertise in retailing, this is the way we win heart there of some our buyers. So that doesn't matter. That will not make any difference to us.
Okay.
Because I'm trying to tell you is that it's not that Reliance Digital or Thomas or other big, they are not present in these markets. In these markets, all big retailers are present, but still we are doing well. So why we should bother about competition in Chhattisgarh or Madhya Pradesh, rather than our policy is to look towards in the heartland.
Okay. Got it, sir. And just a follow-up question on that. Have you, sir, done any study to assess the brand recall for Aditya Vision in newer markets? This is inclusive of your strategy to expand in central UP. So basically, what support are the OEMs offering you in this regard? And how are they encouraging you to enter into newer states?
Regarding the first question, actually, what we know about our survey is that 85% of buyers, they are again coming back to Aditya Vision. The recall value is as high as 85% for the buyers. And we are a household name in Bihar, and we have very quickly in last 2.5 years we have become a very big name in Jharkhand, which is fully reflected by the sales and all in such a short period of time. So brand recall is very good.
Okay. All right, sir. That's all from my side. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to one participant. The next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. And congratulations on a great set of numbers. I just wanted to...
Excuse me, Alisha, can you speak loudly?
Sure. Am I audible now?
Yes.
Yes. So just wanted to understand the UP market a little better. You mentioned earlier that the ASP in UP is slightly lower than in Bihar, and since it is a new market that we're entering, we're also being slightly competitive, which is why we're not seeing the gross margin expansion or operating leverage playing out. So are these stores matching our Bihar stores in terms of payback period or break even, or will that now change a little bit because as the number of UP stores increase?
I think that will be the same, because it's not that actually we try to increase the ASP through our innovative marketing strategy, like display of premium products and all that. It's not that ASP becomes high. It is by chance it doesn't happen. In fact, we have to do that marketing effort for that purpose. So when we entered UP, we found that ASP was low there, but right now we have been maintaining our ASP there also in UP.
Okay, so we will still be able to achieve a 3-year payback period on the newer stores that are opening in UP also.
Yes, certainly, I think that is achievable.
Understood. And just one last question. What is the ESOP cost for the quarter and expected for the full year?
ESOP cost is around 50 lakhs.
For the quarter and for the full year?
It will be 2 crores.
Then the jump in employee expenses ex of ESOP is very high on YOY basis. What would the reason for that be?
The reason for that is that they have done exceedingly well, our employees, and they have won so many schemes, and they will get very good incentives. So this is the reason of jump in employee cost. New branches have been added. Then you require more staff also when sale is very high. You require temporary staff also at many places. So this is the reason.
Okay. Okay, thank you.
Thank you. The next question is on the line of Ankush Agrawal from Surge Capital. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So just one question. Can you share the gross debt and gross cash number for the quarter end Q1?
Gross debt. There is no gross debt, I suppose.
Okay, and how much is the cash?
Cash is around, on the books, I'll say cash is around 10 crores will be 3 crores cash, and the bank balance will be around 8 to 10 crores.
Okay, so you're saying about 10-15 crores cash and no debt?
No, the debt is in form of when we go for buying aggressively, then we have to utilize the working capital, and which is temporary in nature.
But so broadly, I mean, that means you have used the entire cash that you have raised recently, but given the kind of quarter that we had, we would have got a lot of cash as well. So I believe the cash balance should be higher.
But what makes you think like that?
Because I think at the end of last quarter, Q4, we had about, say, 100 crores of cash and about 125 crores of debt, right?
Okay. That is kept in form of for the fixed deposit.
Yeah, so how much would be that, sir?
How much?
How much would be that, like including the fixed deposit, how much would be the total cash
investment?
investment?
A little over 100 crores.
Little over 100 crores. Okay, got it. Thank you, that was it.
Oh.
Thank you. The next question is from the line of Omkar Gurdare from Sri Investments. Please go ahead.
Hello?
Yes.
Yeah, my question was regarding the planned NSE listing. Now you have approved it. What would be the approximate timeline for all the process, and when could we see the listing?
I think we'll be applying after the AGM and after a split, because there has to be a gap of 30 days between two record dates. So we are expecting we'll be approaching them by end of August.
So by end of August, you would be listed on NSE. We can send.
No, we will apply for that, and
okay.
Subsequently we'll get listed maybe in 1 month's time or something.
Yeah, so what is the conversation with your team regarding this? How much time it takes generally?
Around 1 month. This is what we have been told.
Okay. Another question is on the season. I mean, was it as per your expectation, below expectation, more than expectation? How was it?
It was a normal season, I would say. We'll put it like that. It should be warm in summer, so that was it. There's not much disturbance in this quarter. No one.
It was a normal summer. No one-off or on any side. No surprises on.
It was a normal quarter. Yes, sir.
Okay. One more question is on the product mix. So in next 2-3 years, in your PPT, you have mentioned that you would be gradually moving towards the high margin products. So can you talk more about that? What kind of products these are, and like how much they can contribute in next 2-3 years?
We do not guide in that way that we'll be so focused towards. Actually, market is like that, but what happens that everybody knows that margins are higher in the appliances and other products rather than in IT or mobility. So this is a fact. And we do have not guided that we'll be focusing towards that, only on higher margin products.
Okay,
Actually, everything become a basket of categories, and so that entire basket gives us that return.
No, so basically, what would be the product mix, say, 2-3 years down the line? It would remain the same as it is, or like there would be a change over there?
We are expecting a gradual increase of IT and mobility related products, and it will be gradual.
Margin products, you are saying? Hello?
Yes.
No, I was asking, you are saying that you will be gradually moving towards the IT related products. So
we will not be moving up. What I'm saying that is what we have seen in the market. So we are giving you the guidance that it will be increasing gradually.
Okay, and the fundraise which you have done is like you have deployed. Can you just give the bifurcation how you have deployed that cash?
It has been used as per whatever we have given in guidance that it has been used. You can go through the monitoring report.
The entire capital has been used for working capital requirement for this season?
The amount what we have marked for working capital, it has been used for working capital.
Growth as well, right? That's what I'm asking. So apart from working capital, what you have used?
Only 8 crores were for general corporate purposes, on which we are still we have not utilized it fully.
Okay, all right. Thank you.
Thank you. The next question is on the line of Devanshu Bansal from Emkay Global. Please go ahead.
Sir, thank you for a follow-up opportunity. I just wanted to come back to this other expense that has been there. Sorry for extending on this. Sir, last year for full year our other expense as a percentage of sales were about 3.1%. This time around it is 3.3%. And typically for full year FY25 they should remain in the range of 3%, because if we extrapolate this 29-30 crore that we have done in Q1 for the next 3 quarters, that number will be significantly higher. So just wanted your views on that.
No, it will come down with the scale, which operating expenses directly related to sales.
Okay.
The top line. So whatever, if sale is like that, if you expect sales of Q1 for rest of the year, then definitely let it be like that operating expenses. So actually it is directly related to sales.
So entire expense is variable. There is nothing like fixed component in this, right?
No, there is nothing, because rent is not there, the salaries are not there, interest is not there. So it is all variable expenses are there in other expenses.
Got it, sir. Thank you so much. And secondly, from a base perspective, last time around we indicated that...
Like otherwise also you will have to understand one more thing. I think that it is haunting you. Actually, when your sales are going up, so your credit card commission also goes up, your financing cost also goes up. So these are all there in operating expenses.
Okay.
Then
got it, sir. And yes, sir. So I wanted to check on the base for the September quarter, which is the ongoing quarter. Last time, last time around, I remember that July was a weak month for us, right? Because June was very strong. So how have been the trends for Q2? As in, are they in line with what we have delivered in Q1? So what's your expectation?
So far it is very encouraging.
Very encouraging. Got it, sir. Thank you so much. Thank you so much.
Thank you. The next question is from the line of Aryan Oswal from Finterest Capital. Please go ahead.
Hello.
Yes.
Yes, sir. Congratulations on the good quarter. And so my question was that previously you mentioned that your focus is to conquer Central and Western UP, but now you mentioned that you are planning to foray into Chhattisgarh and MP markets by the next financial year. So, sir, does this mean that we will be able to conquer Western and Central UP by this financial year? And if not, can you please guide us precisely on our plans for the next 3 to 5 years?
3 to 5 years will be a very long period, but still I can give you guidance up to FY27 for next 3 years. This financial year will be operating and expanding in UP only, in Central UP.
Okay.
In this financial year, it's a very huge state, Uttar Pradesh. So we'll be fully occupied entering in capturing around Central UP. And by next year, we'll be going towards Western UP as well as exploring newer areas like Madhya Pradesh or Chhattisgarh.
Okay. Okay. Thank you so much, sir. Thank you for taking my question.
Thank you.
Thank you. The next question is from the line of Nitin Gupta, who's an individual investor. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes.
Yeah. I have actually most of my questions are answered. I have one suggestion with respect to the reporting of some of the details like SSD growth, bill cuts, ASP. So those things in the quarterly results are not included. So is it possible to include them?
But it is there in investor and we do it half yearly. The policy of companies to give half yearly figures. Quarterly we are.
That's what I was suggesting. Like, is it possible?
No, we'll be only doing it half yearly because that will give a good proper. In fact, it reflects proper picture of financials and other information, MIS.
Okay. Okay, fine. And last that I wanted to ask was, are we present online or no?
Are we present?
Yes.
I couldn't understand you. Please, can you please repeat it?
I'm asking like, do we do the sales only via stores that we have opened, or are we present online also?
No, we are not present on online.
And any such plans in future or no?
Not as of now.
Okay. So the same store sales growth has been indicated to be around 20%, I think, for this quarter. So yes. Can you divide it into the volume and the value growth?
No, that we can't.
Okay. Okay, fine. Thank you. And all the best.
Okay, bye.
Thank you. The next question is from the line of Anshuman Srivastav, who's an individual investor. Please go ahead.
Hello?
Hello, yes.
Hello? Yes. So, sir, last year we had store count growth of approximately 40%. We are saying that we had the same store sales growth of approximately 21%. We have other expense growth of roughly 50% for Q1 FY25 over Q1 FY24. And there was also a surge in demand for compressor products in the economy. Yet, in our Q1 of FY25, we have a sales growth of only 39%. This is the first question. Second question is, we have a Aditya Suraksha insurance policy for the customers. How is that performing, and how much deposit have we been able to generate through it, and what is the profitability of that insurance policy?
That we cannot give you right now. That we cannot give you that figure. Okay, how much has come from Aditya Suraksha? And what was the first question? What was your first question? About same question. It's very correct. If we have grown by 39%, and around 20-21% has come from same store sales. So we have got out of around 900 crores, we have got around 18% from new stores.
From new stores, we got only 18%.
Yes.
Okay.
Same store sales growth has been at 21%, and we have grown by 39%. So the gap between 39 and 21, the 18% has come from the new stores.
Okay. So 40% stores contributed only 18% because they were new stores, but they will contribute more.
They were not even, maybe the stores are only 1 month old or 2 months old or 3 months old. Yes.
No, for the Q1, this should have been larger enough because for the entire Q1, all of these stores were available. But okay, these stores were very recent, so they did not contribute. That's the answer. Okay.
It depends. It's not that we have been opening stores and it goes in the same way. I think we have done well in that.
Okay. So, and next is for Q1, we opened only 5 stores. What is the target of opening stores for the rest of the year?
We have given our guidance. We'll be opening around 25-30 stores in this financial year.
Okay, sir. And final question is just, which has been asked by other participants also.
Due to time constraints, that was the last question for the day. I now hand the conference over to the management for closing comments.
We trust that we have addressed all your inquiries to your satisfaction. If you have any remaining unanswered questions, please don't hesitate to contact our investor relations agency, Go India Advisors. They will be more than happy to assist you further. Thank you so much. Goodbye.
On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.